In a comprehensive effort to address the complexities and shortcomings of the credit card market, the Consumer Financial Protection Bureau, CFPB, is spearheading initiatives aimed at simplifying pricing structures and fostering a more competitive environment. This action comes in light of findings that approximately 190 million Americans are burdened with over $1 trillion in credit card debt, navigating through a labyrinth of fees, rates, and marketing tactics that can obscure the true cost of credit. The CFPB's analysis reveals a striking disparity in the credit card market. The largest companies, which hold about 95% of the total credit card balances, often impose higher interest rates and less favorable terms compared to their smaller counterparts. Specifically, it has been noted that the top 30 credit card companies are predominantly large banks that do not necessarily offer the best deals to consumers. For instance, many of these large issuers have credit card products with annual percentage rates exceeding 30%, a stark contrast to the rates offered by smaller banks and credit unions, which can be lower by as much as 10 percentage points. This concentration of market power not only limits consumer choice, but also makes it difficult for smaller, potentially more consumer-friendly options to penetrate the market. Major credit card issuers capitalize on extensive marketing resources that can include high-profile advertising campaigns featuring celebrities, attractive sign-up bonuses, and pervasive online advertisements. These efforts, while effective in gaining consumer attention, often divert focus from essential factors such as interest rates and fee structures, which are crucial for making informed financial decisions. Moreover, the CFPB has cast a critical eye on credit card rewards programs. These programs are prominently marketed by large issuers as highly beneficial, promising consumers the ability to earn by spending. However, the reality is often less rosy. Rewards programs typically come with complex conditions that can include expiration dates, redemption restrictions, and fluctuating point values, making them less advantageous than they might initially seem. The Bureau's findings suggest a disproportionate relationship where consumers who maintain revolving balances and thus pay more in interest and fees receive only a minimal portion of the rewards. The pitfalls extend into the digital realm, where consumers frequently turn to online comparison shopping tools. Ideally, these tools should provide clear and unbiased information to help consumers choose the best credit card offerings. Unfortunately, these platforms can be influenced by hidden incentives provided by major credit card companies, leading to recommendations that favor these issuers rather than presenting an impartial assessment of all available options. Responding to these issues, the CFPB is determined to increase market transparency and enhance consumer protection. This includes taking steps to ensure that advertisements and comparison tools genuinely aid consumers in making decisions that align with their financial interests. The Bureau is also committed to advocating for more robust competition within the industry, which could lead to more favorable terms for consumers. Looking forward, the CFPB will continue to closely monitor the practices of credit card issuers, particularly focusing on how fees and interest rates are structured and applied. By promoting clearer pricing, better consumer information, and a more competitive marketplace, the CFPB aims to reform a convoluted market into one that serves the best interests of American consumers, helping them to navigate credit choices with greater ease and confidence.